Hey there, Shane Oglow here with the Rogue Traders. It is May 3rd, 2024, and this is your weekly trading update. Now, it's been quite a week since our last update last Friday. Oh boy, we had a lot of market action, a lot of pain for some people. However, our Synth miner account, for example, is still up 112% annualized return against being down about 44% if you are hodling. So that account continues to perform despite the down move. We'll get into that in a second. Let's take a quick look at the charts. Let me share my screen here, and we can take a look at least at what happened, kind of walk through it. Now, this is a 1 hour chart. You can see we've got the 1 hour up here. Pretty big move. This is last Tuesday, April 3rd. Kind of we hit a high, almost 65,000. And then, by the time we got to Wednesday, May 1st, 3 days ago, boy, we were really, really looking nasty, 56,500. If we take a look at the sort of the tip to tail, we had, probably 13%, I bet. Yeah, 12.75% tip to tail. That's a pretty sizable move. Now, it's not really all that strange or outlandish for Bitcoin. Bitcoin moves an average of at least 10% every 90 days. So it wasn't all that crazy. But I think what made this a little bit more significant is the fact where we were from a technical side. Let me go to the daily chart. And this gives a little different perspective. We were stuck in this channel for quite some time. We went to the channel at the end of February, okay? So it's been a while. And, it bounced off, kind of bounce. And it finally broke that technical support. And that was a 100-day moving average here, that blue line. Now, a lot of people might not be into technical analysis. I use it very, very, very lightly. A lot of times I don't even use those EMA or those exponential moving averages. But I think it was significant because a lot of people look at that. And really the next support was down here at the 200-day and where we'd have previous support. And I have this blue chunk here because if we go back further in time, back to 2023, 22, 21, we had some areas of resistance. There was some high volume areas. So it's probably going to get sticky there. Now, Bitcoin is notorious for having knee-jerk reactions on news, and that's why I use technical analysis lightly in a general sense. It broke, but it didn't run away. It did not run away. A lot of people were expecting this thing to go right down to 52, 53, 50, something like that. It didn't. And then we bounced back up. Now, we haven't gone back up into the channel yet, and this might just be a slow bleed, and we might keep coming down. Could be. We could grind back up into the channel. There's a lot of different reasons for it, and you can check that out. We do our daily live streams. We discuss this stuff. There's issues in China. There's the Hong Kong ETFs, which were rushed through, that didn't get a chance to get marketed. There's some whales buying. There's been ETF outflows. There's a lot of some different interests massaging and causing this price to move around like any asset, but Bitcoin's got its own particular circumstances. So I think that, our philosophy hasn't changed. We look on this on a daily chart. I mean, look at this in a year. This is nothing more than a hiccup. If we think this thing's going to 150,000 or 200 or whatever the case may be, whether that takes 6 months or 6 years, who knows? If our long-term bias is still bullish, well, we're not going to change our strategy too much. Yeah, we might have a pullback. We might come back in the 40s. Who knows? Then take 3-6 months to move back up in the 70s. I don't know, right? Nobody knows. But we're going to keep that long-term bias. But that was a challenging time. And I know there was a lot of liquidations because, this is pretty basic technical analysis. A lot of people were looking for this to break. So a lot of people went short. And they got monkey hammered when it went back up, because a lot of people who trade Bitcoin are total degens and they throw their entire account at it, super leveraged. So it doesn't necessarily take a really big move for them to get wiped out and liquidated. Now, let's just quickly go back to the 1 hour chart here. And we can say, well, look, hey, from the bottom of that rundown, we're touched from the tail of it back up to where we went. 6%. We retraced nearly half the move. Interesting stuff. And now we're hanging out just at the bottom. Look, we've been down here before. This 50, we're at 59.5 right now, roughly, right? We wicked down to 59.6, 59.7. Look, wick down to 59.3 way back in March 5th. So what I was telling our members is that, hey, is this an actual clear break, or is this going to be a wick and then go back up in the channel? It was nothing more than a few days of pain. I don't know. I think there's a good chance to go up channel. I think it's more likely we're going to keep going down for a bit. But again, it's responsive to all this news. All of a sudden now, if these Hong Kong ETFs and this money starts coming out of China, especially with capital controls, the US ETFs pick up, all of a sudden there's some positive news, back up we'll go, right? Technicals kind of get blown out a little bit. So that's where we're at this week. So the next thing I'm going to mention is that, when you're, we're primarily option sellers. And one of the measurement tools we use is called Delta. And Delta is sort of like it's a risk measure that compares the change of the price of an underlying asset to the change in the option. There's four primary ways we use Delta, but one of the most important ways is directional risk. So if I'm long Delta, positive Delta, that means that I'm pointing upwards. My risk is down. So if I'm long Delta, I'm long the underlying asset. In this case, it's Bitcoin. I bought some calls. I sold some puts. Those are things that would give me long Delta. It's showing me my directional exposure is to the downside. So if it goes down, it's going to hurt. My equity is going to go down. If I'm short Delta or I'm negative Delta, that means I'm short the asset. I've sold futures, or I've shorted Bitcoin. I bought puts, or I sold calls. Those are things that are going to make my Delta negative, showing me that my risk is to the upside. So if the underlying asset, Bitcoin, goes up, it's going to hurt my equity a bit. So when you're selling options, and one of the things I'm doing on the recovery account is trying to clear the book off, but normally you have a book, and you generally, I'm not going to say generally, a lot of option sellers will try to maintain a Delta neutral book. And that means that their directional risk isn't too heavy one way or the other. They stay kind of close in the middle. They don't want to have a heavy positive or a heavy negative Delta. It floats back and forth as the price of the underlying change, as options near expiry, and different factors that affect that Delta. So they're always kind of adjusting and tweaking and trying to keep it so it doesn't get too far out of whack one way or the other. So when you get a big move, 10, 12, 15, 20%, it's going to hurt. It's going to drive down your equity. Now, our Synth miner account was amazingly resilient. Now, I did have to make some adjustments in that account. So what happens when you get a big move that goes against you? You're positive Delta, and it goes down. Well, you're going to have to adjust some of those positions if you have options. If you're just holding the underlying, there's nothing you can do. You can sell the underlying, but basically there's things you can do. But if you're only trading the underlying, you're just going to, the price goes up, you make money, on paper. Price goes down, you lose money. Just the same as you own any asset, right? So it causes a bit of short-term pain for sellers because they have to adjust. And by adjusting, that means we're typically rolling into other positions. We're buying ourselves more time to get that premium. So we take that loss, we lock it in, we crystallize it, and then we resell it somewhere else at a further date and time, or at a different price, or both. And that's the strategies that we teach and that we've done for decades. So that being said, I did have to make some adjustments. Let's take a quick look at the Synth miner account. Now, before I get to that, let me just share with you, and this is the slide from yesterday's Deribit Live. If you don't know what Deribit Live is, we do it every Thursday with Deribit. It's a little show we put on for a half hour, and we talk about a lot of this cool stuff. You should really check it out on our YouTube channel or on Deribit's YouTube channel. But here's a Synth miner account. Look, we started 9 weeks ago yesterday, because this is all data from yesterday, so it's might look a little bit better today, but it doesn't really matter what's from yesterday. Bitcoin Cash. We started off 9 weeks ago yesterday. We just went in, boom, we bought Bitcoin. 0.0825 Bitcoin is what we bought, about $5,200 worth. Our Bitcoin Cash is up. Our equity is down a little bit from last week because the price moved down. That makes sense, perfectly normal. And the Bitcoin mined is 0.019. So we increased the amount of Bitcoin we have by about 23% over the course of 9 weeks. And cash is up. Makes sense. USD synthetic mining annualized return. Now, this is the annualized return. We're up about 112%. Now, it's important to take a look at this versus hodling. Hodling is just holding the underlying. If you hodled, if you bought in the same day we did, 9 weeks ago yesterday, you're going to be down 44%. Okay. Annualized. All right. So that is interesting. So we took the chart. This is our Bitcoin return. In Bitcoin, we can see our this is the big move down in the underlying. So again, we're going to take a little bit of hit because we're maintaining a bit of a book. We're mostly selling puts in this account. Against hodling is the red line. That red line is always going to be flat zero because you just bought in and you're just holding and waiting for that thing to go up. Okay. The next thing is we're going to look at the USD return with the synthetic miner, and these are going to mirror each other. But over time, we should get a bigger and bigger and bigger separation from if you were just hodling. Okay. All right. So quickly, let's just take a look at the accounts, and which I think we're here. I don't know. Yeah. Let me just make sure I got the right data up. I got so many screens, so many trading windows. Yeah, here we are. Here's the Synth mining account. Interesting. Our expiry this morning, everything got bought back cheap, so it's going very, very well. Again, we started off with 0.0825. We're at 0.1051 now. Now, one thing, if anybody's paying attention, they'll notice that we have some short calls, and we had some short calls this morning that expired yesterday that we sold. We decided to do this to reduce our directional exposure, and the reason why we did it, in this case, yes, normally we're just selling puts, right? Like go up May, we'll just have a put spread. Go May 17th, just a put spread. May 31st, that's a long time for this account, but there's a reason why that happened. When that plunge happened, I had maybe some 61,000 strike puts that were expiring May 3rd. I managed those. I moved half of it down lower in May, down to I think 58,000, and I had to take some and I had to move them out to the end of the month in order to keep all that value. We didn't want to lose any money. We just had to delay the gratification of getting it, right? But we decided, because we had more risk on, so we had 6.6 of a Bitcoin risk. We only usually want to carry about 0.3 of a Bitcoin. We decided to sell some calls against it, daily calls, until we get all that, until we can balance the account back out. We'll keep doing this daily until we get to the 10th, and we can reduce the 10th. So we'll take another 0.1 of a Bitcoin off, and we'll just keep doing that. So this morning that worked out really well. I hope if you don't follow me, that's okay. You can always follow us on patreon.com/Roguetrader.academy, or go to Roguetrader.academy and sign up and join us for our live calls we do every week, coaching, our interactive live Telegram channel. We got all kinds of great stuff there to help people out. But the point is we went ahead, we did something a little different. We sold 0.2 of risk. And we just did this morning. We sold these for about 0.055. They're coming down. And I've got orders in to buy those back a bit cheaper. And we'll just keep doing that, rinsing and repeating. And we're going to exceed our 10 basis points a day target. So again, you want to learn how to do that, please check out our site. Actually, for anyone who's interested in joining our Gold membership, and Gold membership gives you everything, including monthly one-on-one calls with myself and my partner, Richard. You can check out that. I'll put that link down below. It's a free call discovery. We can see if you're a right fit for what we're doing, if you're ready for that. If not, that's okay. We've got other things for you. So that is the Synth miner account. Nothing to say here except awesome. It's kicking butt despite the big drawdown. Now, if Bitcoin fell by 50%, that'd be a different story. We'd have more work to do. We've lost more equity, but of course, that would have been a disaster for anybody, even if you're just holding Bitcoin. But you know, while anything can happen, I don't think that's going to happen. Let me just go to the recovery account. Now, this is the account that I'm working on slowly to recover. It got hammered. Where is it? Why don't I see it? Hang on a second. It's probably way down here. Maybe it's over there. Nope, there it is. I got it. I need an assistant. I need to train my daughter. She's 8 to start trading for me and managing my stuff. But all right, so Here's the deal here. Hey, 0.0254. We've lost hardly anything after that drop. I had up to close to 0.03 at the end of last week. Took a bit of a hit. We're getting it all back. Now, I've been managing risk. Still too much risk. Now, the point I'm doing in this book is to de-risk. Remember when I said at the beginning, I'm talking about that delta exposure? When you maintain a book of options, you kind of want to be, unless you've got a bias one way or the other, you kind of want to stay relatively delta neutral, okay? Not be too heavily biased one way or the other. It's going to take me a while to de-risk this book, and I'm going to trade it more positionally. Positionally means that I won't keep a lot of trades on just for no bloody reason in order to earn a daily theta decay, like that time decay every day. Again, don't be too bothered by the terms I'm using. If you don't know what I'm talking about, that's okay. You can learn all this stuff. It's really not that hard. But if Bitcoin makes a big 10% move, you're going to bet. I'm going to jump on that because premiums tend to spike, especially when Bitcoin moves up. It's opposite from traditional markets. And I'm going to take advantage of those higher premiums, and I'm going to use those times to really make money. Got to make hay while the sun shines versus maintain that delta neutral book, which is great for a large account. That's what we do day in, day out. That's how we manage funds, right? But for a small account, it's easy to overtrade and you get into margin troubles. You get bigger drawdowns and it's annoying as hell. And I'm going to be perfectly honest with you. I put my reputation on the line here, right? But I could just post every single trade I make that's successful and show you how great I am. But the fact is I have losing trades all the time. Any active trader does. You are going to learn more from trades that go against me than just watching me cherry pick all my great trades. Simple as that. You're going to learn more from how I get out of trouble, because I guarantee when you're trading, you're going to get into trouble. Everyone does. Okay. So we're going to work on this. So what have I got? Just a quick synopsis here. I got, again, I've got a fair bit of risk up here. I had a lot go out this morning at 59,000 short calls. They expired slightly in the money, so I had to take that small bit that I paid for it and spread it out. Now, those are actually profitable for me, even though they expired just in the money because I sold them at a higher price, but I still want to recoup all that. So I've got this overnight trades here, so I'm hoping we stay below 60,000 by tomorrow morning. We're going to see what happens this afternoon in the U.S. There's a chance it can run up. U.S. might wake up and be strong, and I'll have to adjust those. I don't mind kicking those out another day, even rewriting them at the same price, as long as it doesn't go up to 66 or something, which will force me to push them out a little bit more in the future. Most likely, I could write the same strike or close to the same strike day after day after day until it catches up, because you get a lot of premium doing that. But that's a different technique, and this account isn't big enough to do that. So I'd rather play it a little bit safe. So we've got stuff. We've got May 5th, which is Sunday. Just a little tiny bit up there at 61.5. You notice that all my puts are gone. All my puts are gone. They've all been bought back cheap. You can see I bought coverage down here. This is part of controlling margin, which you'll learn when you join us. I'm going to sell puts against that if we take a tank down. So that's my insurance. But again, it was for controlling margin. 6, I have very little. I've got 0.3 out at 61. But the 10th is the next big expiry for me. I've got these 59,000 short puts here, which I'm not at all concerned about right now. If I have to move them, I'll move them. Other than that, I'm just focusing on the short-dated stuff. Once I get these cleared out over the weekend and into next week, I might start moving risk forward. Bring it forward. We've talked about this before in order to try and basically just realize the value that's in those longer dated options faster. So if there's $500 sitting out there at the end of May, if I can find a way to realize that $500 in a week instead of waiting 4 weeks, you bet I'm going to do it. It's just going to depend on my margin. It's going to depend on the market, the skew, and what the implied volatility is. So that is a little bit long. Sorry about that. Trading update. And if it's a little bit technical, don't worry. Everyone, if you don't know anything about options, if you're new to options, it all sounds fancy, schmancy. Oh, you got to be super smart. Trust me, anyone can do this. Just takes a bit of time. Happy to show you what we do if you want to come and join us over at Roguetrader.academy or on Patreon.com/Roguetrader.academy. every weekday for our live streams. That's it for today. We're going to see you next Friday.